Hi everyone, my name is Nicole C and I will be your host. In today's episode, we'll be discussing charity fraud. The official definition of fraud is the action of obtaining advantage or causing loss by implicit or explicit deception. Charities are often regarded as a soft target for fraudsters. The impact of fraud on individual charities and the sector as a whole can be devastating, both in terms of financial loss and reputation damage. These are some of the reasons that charities are often targeted. They have a high level of public trust and confidence. They rely on the goodwill and support of employees and volunteers. They have high levels of cash income, and they lack the scrutiny and division of duties. Since 2010, the National Fraud Authority has published an annual fraud indicator which estimates the cost of fraud to the UK by sector. In 2013, the AFI estimated that the loss to fraud to the UK economy as £52 billion per year, and of this, £147.3 million was the estimated loss to the charity sector. 70% of charities experience fraud externally, whilst 30% suffer internal fraud. The most common types of fraud cited by charities have been payment and banking, accounting fraud, and identity fraud. Now let's take a look at an example. Brendan Joyce was an accountant for a Bristol-based charity which raised money for local hospitals. In 2012, he was jailed for 3 years for defrauding the company of over £500,000 in the latter part of his 17-year career there. He used the money to fund his extensive collection of cars, of which he owned over 100. He committed the fraud by forging the signatures on hundreds of cheques and by creating false invoices for work that was not performed. So what are the signals that you may be dealing with fraud? When in doubt about employees, these are the most common indicators. Secretive about their work. Exhibits disproportionate stress. Is unwilling to share duties. Takes few or no holidays. And works long hours with a normal workload. When referring to the process and controls, these are the red flags you want to be looking out for. Unusual expense claims. Abnormal number of errors. Suppliers dealing with specific individuals. Requests to change bank details. And lack of transparency in normal activity. If you have suspicions or concerns about possible fraud or criminal activity occurring, it's essential that you don't ignore it, no matter how unsure you may feel about it. However, it's equally important that you don't confront the person that you suspect might be doing something wrong. It's very important to follow the internal reporting procedures for your organisation. If you bypass these and report straight to the media, for example, you may lose legal protection as a whistleblower. When dealing with your concerns, trust your instincts. Report it using the right channels and keep it confidential. A final thought to keep in mind is to make sure that nothing is being swept under the rug. Charities rely on public confidence and trust, and there is often fear that donors and other funders will be deterred if there is or has been fraud within a charity. By being open, transparent and accountable, and showing that robust action has been taken, any negative impact on charities' reputation may be significantly reduced. Thanks for watching today's episode. Don't forget to subscribe for more videos on dealing with fraud.